You mentioned something earlier. You said that some people view that the supported living space as recession proof. What did you mean by that?
So when I say recession proof, I mean that regardless of what's happening in the wider market, whether interest rates are high, interest rates are low, things are up, things are down, Trump is in, Trump is out, whatever the case might be, you continue to earn money and you can probably predict within a fair margin what sort of money you're going to be earning. As I said, I gave the example. It's an extreme example, I know, but it's something relatively recent that most of us will remember that during COVID, when it was Boris, I think, was prime minister at the time, basically said people don't have to pay rent. Of course, people stop paying rent because why should they pay rent if they don't have to? And as landlords, obviously that's a bit of a difficult situation because yes, we had the option to take payment breaks on mortgages and all the rest of it, but once you take that break, it potentially could have an effect in the future when you go to renew your product or apply for different products or try and invest in other things. That payment break is going to be on your record.
Okay, so I hear a lot of people talking about supported living, especially in the mortgage space, because people want to purchase properties in order to facilitate supported living. If you could explain and to people that are listening that don't know that much about it, could you just kind of explain a little bit more about what it is? And is there actually a need for more places that provide those services?
Great question. So, supported living, there's two sides to it. There's the care provider side. So, that's the people, the organizations that are actually looking after those people. Care providers. And then you've got the accommodation provider side, which is where you're providing accommodation for people. So, that may be anything from, let's say, care leavers or asylum seekers or ex servicemen, and these are people that may or may not need any other care. There may be just people like me and you that maybe, have turned 16, 17 and have left a foster care placement, for example, because they're now too old, but need a little bit of support in terms of maintaining their tenancies, maintaining their housing, and transitioning into full independence. That's a type of supported living. And there's a whole range of different types of supported living, certainly from the property side. Over the last couple of years, a lot of people have come into supported living as an investment model. Primarily, I think, because to a degree, it is seen, and I stress it is seen as, I'm not saying it is, I'm not saying it isn't, it is seen as being recession proof. So, what do I mean by that? If we look at COVID, when the Prime Minister said, all of your HMO tenants or whoever didn't have to pay rent because that was just the decision that the government made. Obviously, a lot of people, a lot of us that have properties and had properties at the time, kind of panicked because if we're not receiving rent, how are we going to pay our mortgages? How are we going to pay our costs? How are we going to, maintain our properties? During that time, a lot of regular landlords, for lack of a better word, noticed that the supported living landlords were still earning money, were still getting paid. And because of that, a lot of people obviously wanted to protect their investments and protect the value in their investments. So a lot of people started to transition towards supported living. Add to that Article 4, Section 24, and all of these other
Here we
things.
go. See, this is what you professionals do. You throw out these things that not everybody that's watching will understand. So let me just rewind. You use the term which is HMO, and one of the things that I found, and this is one of the key reasons why I released my most recent book, which is A Mortgage is a Really Big Loan. I will have the description in the link, is because there are a lot of terms that are bantied about in society. And quite often, as an adult, you feel that you should know what the thing is, but you don't. So you said something about an HMO. Could you just explain what an HMO is?
Of course. So HMO stands for House in Multiple Occupation. And that differs slightly between each local authority or each borough that you may be in. Typically, it's a house that has three or more people living in it who are not family or not related, or they're not sharing it as friends, for example. They are separate households that just happen to live under the same roof. Everyone has their own room, and maybe they share some facilities, for example, a kitchen. That is typically an HMO. There will be some nuances from county to county or from borough to borough in terms of what they define as an HMO. But typically, it's just a shared house. It's not even a fancy word. It's just a acronym for a shared house. And unfortunately, in supported living and in social care, we have a whole range of acronyms. So I apologize in advance if I get carried away. But please do pull me up, and I can just clarify what things are for everybody's benefit.
Okay, and around the HMO, I know that in certain parts of London, even where I live, you have these houses that have were really big houses, so the older houses. And what people have done is they have separated those out either into apartments, or you see these skips in front of these houses where they're converting these into HMOs. So it has been a strategy that a lot of people have used to generate wealth, to generate a pension pot, because for a lot of
Absolutely.
people, it is a pension pot. So you spoke about HMOs, and now for those people who had heard the term but didn't really know what it was, thank you for explaining that. Then you got into some article of some article of some article. What was that you were talking about?
So Article 4 is again related to the whole HMO thing. So in again, it varies from borough to borough, from county to county. But each local authority, because they want to preserve their housing stock and preserve the nature of the housing they have in their areas, in some places they are no longer allowing people to just convert their properties into HMOs just like that, without any level of planning or without going through a process. And in some cases, they won't even allow you to go through the process. So previously, I could just buy a house, buy a big house, big 3-bedroom detached house or semi-detached, extend the garden, convert one of the receptions, do a loft conversion, and all of a sudden, what was a 3-bedroom house is now a 5 or 6-bedroom house. And I could just do that. I could just literally go and do that under permitted development or PD. See, I did it the other way there. So
Yeah, thank you for that.
but now that's changed, or at least it's changed in some areas. So you always need to check within the area that you're looking to invest in what the rules are for that particular area, and make sure that you're not trying to do something that you'll spend a lot of money, get to the end of it, and then the local authorities planning department will tell you that now you've got to undo it all or spend even more money for it to be approved before you can actually let that out.
And you've emphasized a couple of times that things vary from borough to borough. And with this whole right to buy change in November of last year, I've been doing way more right to buy mortgages than I had done in the previous 2 years, let's say. And one of the things that I've found is every council works differently. I have one council that everything is super manual, everything's done paper and fax machines, and then you have
Wow.
others that are more digital. So in you bringing out the point around doing your research, it ties into what I was saying at the very beginning. This is not necessarily a get rich quick scheme. If you're looking to get into property investing, HMOs, shared living, anything like that, make sure that you're surrounding yourself with professionals. And I know Tapiwa and I are in several WhatsApp groups. We're in the Smart Landlords group. I think we're in the Buy the Block WhatsApp group as well. And these are
Mhm.
places where you have people like Tapiwa, like myself, that you have access to ask questions, to get just some directional advice before you speak to a professional. But it's important that you always speak to a professional. So us WhatsApping each other is a good way to get a concept or understand a theory. But how it is applied will always be very unique. So throughout these shows, we can consistently and constantly say, make sure you speak to a professional. We're not giving you legal advice. We're not giving you financial advice. We're just talking through some concepts and some strategies that you can then speak to someone that understands your circumstances and can give you the best advice. So as it relates to supported living, you know a lot about that. What are some strategies that you see people using in order to get into supported living? And how difficult is it to get up and running?
Um, I think it's becoming increasingly difficult because a lot of people, as I said, over the last couple of years, a lot of people have transitioned or are trying to transition into supported living, and it's becoming a bit of a crowded space. And because it's starting to become a bit of a crowded space, why should I work with you as opposed to working with the next person? But I think if you can always show value, and you can always understand the needs of your customer, whether your customer is the tenant that's going to be living there, whether your customer is the care provider that's going to be partnering with you, whether you're providing directly to someone like a Serco or a Mears on the asylum seekers route, understand what their needs are and make sure that you are meeting the need of the customer. I think in many cases, if you can do that, you'll be at least a good few steps ahead. I think what often happens in many cases, and I've been guilty of this as well, is that you have a property and then you want to figure out, okay, who can I get rid of this property to and make some money? Whereas it should actually be probably the other way around, where you understand the need and then secure a property to meet the need of the end customer.
You mentioned something earlier. You said that some people view that the supported living space as recession proof. What did you mean by that?
So when I say recession proof, I mean that regardless of what's happening in the wider market, whether interest rates are high, interest rates are low, things are up, things are down, Trump is in, Trump is out, whatever the case might be, you continue to earn money and you can probably predict within a fair margin what sort of money you're going to be earning. As I said, I gave the example. It's an extreme example, I know, but it's something relatively recent that most of us will remember, that during COVID, when it was Boris, I think, was prime minister at the time, basically said people don't have to pay rent. Of course, people stopped paying rent, because why should they pay rent if they don't have to? And as landlords, obviously that's a bit of a difficult situation, because yes, we had the option to take payment breaks on mortgages and all the rest of it. But once you take that break, it potentially could have an effect in the future when you go to renew your product or apply for different products or try and invest in other things. That payment break is going to be on your record, albeit it was during COVID, albeit the government had underwritten it. But nonetheless, it still sits on your record and can affect what you are doing. So people view supported living as something that's recession proof, i.e., regardless of what's happening in the wider market, it's government backed. Therefore, the government will continue paying, whether directly or through private providers, to make sure that those vulnerable people that need to be supported continue to have support.
So the key stage is, once you do decide that you are going to get a buy-to-let mortgage and many other mortgage types, is the financial assessment. So you'll speak to a mortgage broker. They'll do a financial review and assessment. And if you've noticed, I have said speak to a broker. The reason why you want to speak to a broker is you'll get more choice. You'll have access to more products. When you go directly to the banking advisor can only speak to you about that bank's products. So they may be giving you their best rate, but it doesn't necessarily mean you're getting the best rate. Once the broker's done a financial assessment and understood what your goals are, they'll be able to produce an agreement in principle for you. Some people call it a decision in principle. Some people call it a mortgage in principle. It's essentially a document that will say about how much that bank, in theory, would be willing to lend. But keep in mind, an agreement in principle isn't necessarily going to take into account everything, because you can go online. I could get someone an agreement in principle for £1 million right now, because it's not asking you to verify the information. It's just doing a calculation. Once you have the agreement in principle and have an idea of how much you can borrow, you can go out and search for the property that you want. Once you find the property, you're going to need to then negotiate and get an offer accepted. Once that offer is accepted, you move from the agreement in principle stage to the actual mortgage offer. A way of thinking about it is the agreement in principle is based pretty much just on you as the individual or the person making the purchase, whereas the mortgage offer now includes the property details. So you may find that you had an agreement in principle that a bank would lend a certain amount, but when you move into the mortgage agreement stage, they may say, well, we'll lend to you, but we might not lend on this property. So keep that in mind. And it's always good to have your mortgage broker involved in the purchase process, because they may be able to identify things that may be problematic when you get to the mortgage application stage. Beyond that, you're going to have your legal work, exchange of contracts, and then completion. It's always good to get a solicitor involved as early as possible, because the purchase process can be the process of hurry up and wait. So nothing happens for a long time, and then things move very quickly. And when they're asking you for your solicitor's details, that's not the time to start looking for a solicitor. So what are the next steps if you're looking to get a buy-to-let mortgage? Get an AIP, start house hunting, and don't forget to tell a friend. I'm about to bring in my special guest, Tapiwa. As I said, he's someone that I met and is very knowledgeable in his area, and he has an extensive knowledge about a lot of things. So I'm excited about the conversation.
If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description. And I've been in finance for over 30 years. I've done everything from wealth management to collection, so I know a thing or two.